India has worked hard to try to raise its profile on the world stage for companies looking to do business in. But accusations of stock manipulation, accounting fraud against the Adani Group conglomerate by short seller Hindenburg Research now leading to a lot of questions about the credibility.
We're in the midst of what I call the rising India story, where a lot of Indians and non-Indians believe that the next decade, for good reasons and bad, is going to be the Indian decade. High growth, with India taking on the role that China did for the last 20 years. And that might or might not be the case. But let's face it, the India rising story took a hit a week and a half ago.
This is a high-stakes corporate battle, full of drama between a 5-member investment team in New York that no one has heard of and one of the largest and most powerful companies in India.
In the Hindenburg Report, they claim that Adani is accused of stock price manipulation using shell companies that are then using their money to pump up the stock of Adani Enterprises.
So, setting aside all of the offshore allegations and everything else, just any stock that's up 3,000% in 5 years has a 400 multiple would raise questions to any investor, let alone a short seller.
It's not clear how it's going to end. It started a few weeks ago when an American short seller called Hindenburg Research took aim at India's richest man, or rather India's formerly richest man. Hindenburg Research alleged the Adani Group of being the largest con in corporate history and accused it of brazen stock manipulation and accounting fraud. Adani countered that the charges are baseless and said it is an attack on not just the company but on India itself.
We are shocked that Hindenburg Research has published a report on January 24, 2023 without making any attempt to contact us or verify the factual metrics. The report is a malicious combination of selective misinformation, stale, baseless and discredited allegations that have been tested and rejected by India's highest courts.
The fallout of this report has been huge. In the space of a week, a staggering $108 billion, or nearly half, has been wiped from the market value of Adani Group's 7 listed companies. A $2.5 billion secondary share offering of their flagship entity, Adani Enterprises, was abruptly cancelled on Feb 1st of this year. How can a research report by a small, little-known investment company in New York cause over $100 billion worth of damage to one of the largest and most powerful companies in India? What is the report accusing the Adani Group of exactly? Is there any truth behind that? Who is behind this Hindenburg Group and what exactly is short selling? Finally, what is the future of the Adani Group? Let's find out in this video. From meager beginnings in the 1980s, Gautam Adani has emerged as India's richest citizen in a short amount of time. Now, in just a few days, the foundations of his sprawling empire have been shaken. On Jan 24, a small New York investment firm, Hindenburg Research, published a report calling the Adani Group the largest con in corporate history. Mr. Adani is widely regarded as a master operator, with a genius for navigating the complicated legal and political landscape of Indian capitalism. Some investors have, though occasionally expressed concern about his group's governance and opaque finances. And this is the focus of the Hindenburg's report. It describes a complex network of funds and shell companies, some based in Mauritius, which interact with 578 subsidiaries spread through the 7 publicly listed firms. Last year, Hindenburg claims these entities engaged in 6,025 related party transactions. Related party transactions are, as the name indicates, business transactions with people you know. You might wonder what's wrong with that. Dealing with people you know can be efficient, but here's the problem. In a publicly listed company, the CEO should make sure every transaction maximizes the value of all the shareholders. What happens if the CEO hires his brother as a consultant at double the market rates? The CEO benefits, the brother benefits, but the shareholders lose. To ensure such conflict of interest don't occur, proper disclosure must be made. Hindenburg accuses Adani of not making proper disclosures, among other things. Complex corporate structures are common in India and other emerging markets. But the report contends that the Adani Group is engaged in a brazen stock manipulation and accounting fraud scheme. The point of the complexity, Hindenburg alleges, is to manipulate the listed firm's share prices and to shift money onto their balance sheets to maintain the appearance of financial health and solvency amid high debts and relatively few liquid assets. As a consequence, Hindenburg wrote, valuations for the companies are overstated by as much as 85%, and financial holes were temporarily papered over despite severe shortages of liquid assets in 5 of the public firms. Hindenburg claimed that Adani Enterprises had 156 subsidiaries, but its reports were audited and signed off by a tiny accounting firm employing a handful of people, including some in their early 20s. The Adani Group has fiercely defended itself, but that did not stop a sell-off of shares in Mr. Adani's 7 listed companies. First, right after Hindenburg's report was published, then again when markets reopened on January 27th after a public holiday. In 2 trading days, the collective market value of the Adani Group's listed firms fell by $47 billion or 22%. Mr. Adani's personal fortune declined from $122 billion at the end of 2022 to $93 billion. Adani Group's bonds also fell a lot, increasing the borrowing costs. So much that Citibank, Standard Chartered, and Credit Suisse have stopped accepting bonds of Adani Group firms as collateral on margin loans. Mr. Adani's personal fortune, the world's 3rd biggest at the start of the year, fell by more than $50 billion.
Adani's businesses have lost more than $100 billion in barely a week. Adani himself has lost around, $57 billion in personal wealth, dropping out of the top 20 list in the richest people in the world.
In targeting Mr. Adani, Hindenburg could not have chosen a bigger way. The Adani Group is unparalleled in many countries around the world. Their firms run some of India's largest ports, including the Mundra port, the most significant port infrastructure in India by far. Adani Group companies also warehouse 30% of the country's grain, operate a fifth of its power transmission lines, accommodate a quarter of its commercial air traffic, and produce perhaps a fifth of its cement. An affiliated Singaporean venture the Adani Group has entered into vies to be India's largest food company. The Adani Group has also invested in strategically located ports in Australia, Israel, and Sri Lanka. In just a few decades, Gautam Adani has gone from a single man trading diamonds on a street corner in Mumbai to being an industrialist at the heart of India's industry and economy. He keeps a low profile, yet he has had an eventful life. He was kidnapped and reportedly released for a multi-million-dollar ransom in 1998. He was in the Taj Mahal Hotel in Mumbai on 26 November 2008 when terrorists attacked and killed 160 of the hotel guests. He was saved from death by a few associates who called for a second round of meeting over a cup of coffee.
क्या आपको पता है गौतम अदानी मुंबई के होटल ताज अटैक में हॉस्टेज थे? जी हाँ, ये सच है। अडानी होटल ताज के एक रेस्टोरेंट में डिनर कर रहे थे, तब उन्होंने टेररिस्ट को अंधाधुंध फायरिंग करते हुए देखा। टेररिस्ट से बचने के लिए अडानी ने 26 नवंबर की पूरी रात होटल के बेसमेंट और चेंबर हॉल में बिताई। बट इन द प्रोसेस टू रेस्क्यू अडानी एंड अदर गेस्ट्स, सम ऑफ द होटल स्टाफ मेंबर्स वर किल्ड इन द फायरिंग। द नेक्स्ट मॉर्निंग ही वाज रेस्क्यूड बाय द सिक्योरिटी फोर्सेस और होटल के बैक डोर से उन्हें बाहर ले जाया गया। आफ्टर लैंडिंग एट अहमदाबाद एयरपोर्ट, अ रिलीव्ड अदानी सेड, "I saw death at the distance of just 15 feet."
Gautam Adani was born in 1962 in Gujarat, India, one of 8 children in a middle-class Jain family. His father ran a small textile business, but Gautam had little interest in textiles and dropped out of school at the age of 16. He moved to Mumbai to work as a diamond sorter. In 1981, his elder brother started a plastic processing venture, and Gautam returned home to manage it. He began importing raw materials for the venture and then expanded into other commodities such as metals and pharmaceuticals. When the Gujarat government outsourced management of the port of Mundra, Mr. Adani won the contract. The port opened in 2001, and due to reforms implemented more than 30 years ago that made India more business friendly, it has become the largest port in India. Much of Mundra port's growth came after 2001, when Narendra Modi began his 3rd tenure as Gujarat's chief minister. The Adani Group's interests now range from cement to media. In 2019, Mr. Adani secured government consent to set up a lucrative special economic zone in the eastern state of Jharkhand. Share prices of various Adani Group companies have shot up more than 4 times over the past couple of years, raising some red flags, even before the release of the Hindenburg's report. Much of the trading activity in Adani Enterprises has been traced to holding companies in tax havens, leading to speculation about manipulation.
Despite the sharp rise in all his in the Adani companies, you will hardly find any analysts having a formal coverage of the Adani stocks, which is extremely surprising because companies of this size should normally be covered by a whole host of analysts. So this spectacular rise in share prices of the Adani company has really happened with a very narrow and institutional investor holding.
Adani himself has been investigated over tax issues related to coal imports and was cleared. Additionally, other investors had concerns about Adani's debt loads even before Hindenburg. Gautam Adani's family works closely with him. His son Karan runs Adani Ports. Rajesh, his younger brother, is the managing director of the group. Hindenburg claims that his older brother Vinod exercises influence from Dubai. So by accusing both brothers of manipulating the group's share prices through offshore entities, the Hindenburg Report has tapped into existing concerns and caused much damage. The Adanis deny these allegations, of course. They say the short seller is launching a calculated attack on the growth story and ambition of India. In response to the Hindenburg Report, Gautam Adani said, "This is not merely an unwarranted attack on any specific company, but a calculated attack on India, its independence, integrity, and quality of institutions, and its growth story and ambition." Is it really an attack on India? Hindenburg criticized the financial and business practices of the Adani Group, not the government of India or Indian economy. However, the way other Indian companies came to Adani Group's defense in response to an attack by an outsider, an American company, is remarkable. Usually, when a competitor is struggling, corporations are eager to take their business. For instance, Elon Musk recently complained about Bill Gates on the Joe Rogan show.
Explain to me what Bill Gates was talking about when he was saying that you can't do trucks.
I don't know, it's weird. I also heard that at one point he had a big short position against Tesla, which was kind of, I don't know if that's true or not, but it seems weird. People I know who know the situation well, I said, "Are you sure?" They said, "Yeah, he had a big short position against Tesla," which obviously didn't work out too well.
The Hindenburg Report was released at a very sensitive moment, as it was on the morning Adani launched a $2.5 billion follow-on share offering.
A fully subscribed $2.5 billion equity sale led by Abu Dhabi, Goldman Sachs. We didn't really see too many retail investors, and as you pointed out, Kelly, the largest equity sale India has seen.
This is where a company tries to sell shares to raise more money from the company. Adani Enterprises, the flagship company of the Adani Group, wanted to raise money to pay off debts. For the offering to be successful, the market price of the shares had to be above rupees 3,112, the lower level of the share price band at which it was offered. Otherwise, why would anyone pay rupees 3,112 per share when they could get them cheaper on the open market, right? But here's the twist. Adani Enterprises was able to sell the $2.5 billion worth of shares even though the follow-on offer price was higher than the market price. The mystery is, how did they do it? The International Holding Company of Abu Dhabi, a quasi-sovereign fund, pledged to buy $400 million worth of the underwriting and change the mood of the market. After this, 5 family offices in India and other high net worth individuals also agreed to subscribe, according to rumors. The CEO of the IHS, Syed Bashar Suhaib, explained his decision to invest at 10 to 20% above the market price like this. Our interest in Adani Group is driven by our confidence and belief in the fundamentals of the Adani Enterprises Limited. We see a strong potential for growth from a long-term perspective and added value to our shareholders. Retail investors, small investors on the street, and Adani Enterprise employees did not subscribe much for the follow-on issue, as one would expect, since, like I said, they could buy it at a cheaper price in the open market. In the final hours of the last day of the follow-on offering, just before the market closed, a note went out that the underwriting was fully subscribed. Despite this, the $2.5 billion secondary share offering of Adani Enterprises was abruptly pulled on Feb 1st. This suggests that the Indian corporate world did not want one of its members attacked by a New York short seller and brought down. Indian companies usually compete with each other, but when it came to supporting one of their own in response to a huge attack from an American investment firm, they pulled together. This is a warning to other short sellers to stay away from India. This is extraordinary. It is hard to imagine this kind of collaboration happening in many other countries. The Indian government has implemented a policy of encouraging big businesses to invest in infrastructure, which has attracted Adani and other major firms with plans to invest more than $250 billion over the next 5 to 8 years. However, this policy of picking winners comes with risks, including favoritism, broken promises, and unsustainable expansion. The larger the tycoon, the higher the stakes, as Adani is responsible for 7% of India's capital investment by India's 500 largest non-financial firms and operates several strategically important ports. The Indian government must show that India is a reliable place to do business, to attract foreign capital, and it should start by reining in favoritism and stepping up scrutiny of big business. It is in the interest of the government to demand transparency from investment firms based in Mauritius, which are often at the heart of Indian stock market scandals. It's quite remarkable that a report by Hindenburg Research, an investment company with only 5 employees that is relatively unknown in India and around the world, could have such an impact on the Adani Group, a company of great importance that has already been scrutinized by many shareholders and the regulator in India since it's a publicly listed company. From the time it was released on the Hindenburg's website, it was likely the most read statement in India, not only that day, but in the days to come. That 100-page report quickly made its way to the desk of every bank and financial institution and dominated every conversation. So what is Hindenburg Research and who is behind it? Hindenburg Research is an active short seller. Short selling is a centuries-old practice of betting on asset prices going down, not up, and is associated with uncovering corporate frauds such as Enron and Wirecard. Short sellers see themselves as financial detectives, searching for corporate wrongdoing or inflated stock prices. Michael Lewis wrote The Big Short, a popular account of the global financial crisis of 2007-9, which talks about misfits, renegades, and visionaries like Michael Burry, who bet against overvalued mortgage-backed debt and made a lot of money when the asset prices collapsed. It takes a certain type of person to get into the business of short selling, as it is a difficult business with capped returns and unlimited potential losses, since stock prices can only go down to zero, but have an unlimited upside potential. To cover these scandals and to ensure that such frauds don't go unnoticed, short sellers rely heavily on extensive research and analysis. The Hindenburg Report on the Adani Group was released after 2 years of extensive research. It's there on their website. Check it out if you get a chance. I'll leave a link to that below. It's quite extensive. Hindenburg Research takes its name from the German airship that blew up in 1937. It was founded in 2017 by Nathan Anderson, a 37-year-old son of a college professor and a nurse who grew up in a small town in rural Connecticut and earned a business degree from the University of Connecticut. He has been successful in attacking many companies and causing their prices to fall. In December 2018, he released a report on the medical cannabis company Afria. Hindenburg said the company's insiders were using shell companies to divert funds away from shareholders into their own pockets. Afria shares plummeted 30%. In September 2020, they released a report on Nikola, an electric vehicle maker, calling it an intricate fraud built on dozens of lies. Regulators started investigating it soon after the report was released, and the company's stock prices fell by 90%. Nikola agreed to pay $125 million to settle SEC charges that it defrauded investors by misleading them about its products, technical advancements, and commercial prospects. After a March 2021 report accusing Lordstown Motors, another electric vehicle manufacturer, of making overly optimistic claims about its prospects, the CEO of the company resigned. Hindenburg has released 18 such reports on its websites, so it has a very successful track record of bringing down fraudulent companies. The future of the Adani Group, one of India's most influential conglomerates, hangs in balance. Recent turmoils has caused unease among investors and stakeholders. Adani executives have been dispatched to calm investors, but a sense of nervousness remains. The Adani Group, founded and run by billionaire Gautam Adani, is a complex entity with interests in power generation, logistics, real estate, and renewable energy. Its holdings include some of India's biggest ports, as well as a few in Israel, Sri Lanka, and Australia. It warehouses 30% of India's grain, operates 20% of its power transmission lines, and manages a quarter of its commercial air traffic. It has produced a significant percentage of India's cement and is constructing a $5 billion steel mill with South Korean conglomerate POSCO. Despite the allegations, Gautam Adani is highly respected in the Indian business community. His companies have total revenues of $25 billion, which is 0.7% of India's GDP, and a net profit of $1.8 billion. Their annual capital spending of around $5 billion accounts for 7% of the total for India's 500 biggest non-financial firms. The crisis has put a dent in Adani's ambitious plans for growth and expansion. Between 2023 and 2027, the group was forecast to spend more than $50 billion on investment, including a new airport near Mumbai and 3 seaports. These investments, part of India's Prime Minister Narendra Modi's global clean energy push, requires massive amounts of capital, much of which was meant to come from the new share offering which got cancelled. If Adani bond yields remain elevated and share prices remain depressed, securing the necessary funds will be challenging. This could have spillover effects on other firms such as LIC and State Bank of India, whose share prices have already declined, although they do not hold significant stakes in Adani companies. Foreign investors are not taking any chances. Global funds have pulled out a net $1.5 billion from Indian stock market in 2 days. Compliance-obsessed Western multinationals may think twice before forging new partnerships with Indian tycoons, even though it is a vast and potentially lucrative market. Gautam Adani has sought to reassure his foreign backers, but his situation remains unstable. He's relying on strong cash flows, secure assets, and impeccable track record of servicing debt to weather the storm. It remains to be seen whether the Adani Group will emerge from this crisis intact or crumble under the weight of the allegations. Thanks for staying till the end. If you've liked this video, I'm sure you'll like this one too. And please subscribe. It's really encouraging to see the subscriber numbers go up. I'm Sharat Mantravadi. Thanks for watching.